Well, hello and good evening to everybody out there. It's Blair Nightingale here. This is Tradeways Market Monday, kicking off the week, 6 o'clock Central Time. We start our Tradeway programming. We got stuff going on every day of the week right here on Tradeway TV on YouTube. Of course, we've got friends also joining us from Facebook, wherever you're at tonight. Glad to have you here. Thank you. Thank you for being here. We love having you every single week. Had a great session. Lots of great programs last week. Tons of you guys came out and watched. Of course, a lot of you guys will be watching on recordings. These are on YouTube forever, right? They're posted on our Facebook page forever, so you can go back and rewatch. If you haven't been tuning in, this is first time maybe, you have tons of content that you could go back and watch on YouTube. It's all cataloged right there for you. We exist to help break down the confusing world of finance because I'm a believer when you know more, you can do more. And we want to empower you to be able to do as much as possible with your finances. And the stock market is an ever increasingly popular way for people to pursue doing just that. We help folks just like yourself get started and learn how to do it. Now, that said, a lot of people who come to Tradeway are absolutely brand new, right? I meet literally hundreds of people every weekend at our live events that don't know anything about the stock market. And they're almost a little, well, usually they aren't almost, they're actually just shy to say it. And I will go ahead and break the ice for them and say, hey, if you don't know anything, it's okay. You're in the right place because I didn't know anything. I got off the mission field. I got saved at 21, out of the music industry at 24, went on the mission field, and I lived my 20s just basically out of a backpack all over the globe. And the reason I tell you that story is because I didn't grow up learning about money. I didn't grow up learning about money. Nobody in my family taught me about money. My school system, right? That did not teach me about money. They didn't teach me about taxes. They didn't teach me about stocks. They didn't teach me about saving. They didn't teach me about the Fed, about interest rates. They didn't teach me about economic cycles, recessions. They didn't teach me about any of it. So I came in knowing nothing. And a lot of people come in and, like I said, they don't necessarily want to say, but they maybe have a 401k or they have somebody managing their IRA or whatever the vehicle is that they're saving for the future on, but they have no idea what this person is doing or very little. And they're intimidated even by asking because they don't know what to ask. So if you're joining us tonight or you're seeing this recording, you are in the right place, even if you're thinking, you know what, I don't know anything here. If you're joining us tonight and you've been pretty active in the markets, then I'm going to say some things at the end of this session I think is going to be particularly helpful for you because really our topic tonight, while we're going to look at investing and trading, what the differences are, there is something for everybody, no matter where you're at in both of these. And I want to highlight that. And sometimes in our trading community, because we focus primarily on short-term trading here at Tradeway, that's the name, right? That doesn't mean that we don't believe and are actively involved in investing as well. Now, just diving right into it, a lot of us probably have thought, well, isn't it really just the same thing? I mean, isn't trading and investing basically the same thing? And it's not just semantics tonight. Trading and investing really are two different things. That said, technically speaking, would I personally consider trading to be a part of the investing world? Sure, I would concede to that if somebody was asking me that very thing. Yes, I would say that that's fair, but that doesn't mean they're the same thing. And it's actually important that we understand that they're not the same thing, especially when we're new, because the way that we make buying and selling decisions, which is the job of an investor, right? That's really what we do. Ultimately, the doing of an investor, right, is the decision, but then the action is buying and selling, right? We're not traders or investors if there's no buying and selling going on, right? But in that, we buy and sell for very different reasons if we are investing versus if we are trading. They're not the same. And when I don't realize that, I notice new students sometimes, even in the way they make comments or they ask questions or they make a plan for buying and selling, they'll use the tools of an investor and apply it to an expectation that they get from trading, right? But the two don't mix. And that's why we need to cover this tonight. And I think that's going to be a really important discussion, right? Because the two terms seem the same, but when you get down to the practical, they're really not the same thing. So that's that there is a difference and that there is a reason why it matters. But what specifically is that? Before I get into that, I know we got some folks coming into the class tonight. If you're with us, if you join us on a Market Monday, I would love to hear from you guys. You can go ahead always. You can drop your name, a comment, a question, anything you want right there in the comment box. I'd love to hear from you. I will check back on the comments. They're on one of my screens here. I'll go back and forth, but I'll check those comments. And then if we've got anyone who's got a specific question or a comment, I would love to address that. Okay, that's one of the best things that we get to do right here on this platform. It's not just that we get to cover a topic with one another every single Monday night, but that we get to interact with one another on a Monday night, right? And I think sometimes, despite the fact that these are important discussions, the most important thing to me as a coach is that you get questions answered that you might have, or that you get past some hurdles that you may have that keep you from the buying and selling that I referred to just a moment ago. That's pretty important. So I want to make sure we get you that help. Don't be shy. Don't be afraid to go ahead and pop that in. Hey, maybe you just want to say hi, right? Maybe you just want to say hi to us. You want to just let me know you're here. Please go ahead and do that. So I want to break down some differences, right? Not just differences for differences' sake, right? But the reason these are important, once again, is that they will help me understand that the approach that I will use to have an edge in investing is different than the approach I will have to get an edge in trading. Okay. So the first thing I'm going to say, what's really one of the major differences between trading and investing? Investing is for the long term, right? Investing is long term. Even if you take a little bit more of a active management, not such a passive management. Passive management, very, very common. You have your IRA, you have your 401k, you have whatever retirement or wealth creation account that you have that's invested in the stock market, and it's essentially just set it and forget it, right? That's pretty industry standard. There are exceptions. Tradeway and what we do with long-term money is one of those exceptions. We believe in a more active management, not overactive, not the same as trading, right? But we do believe in an active management. For example, the market is down 25% this year. Should we just leave our long-term funds in the market all the way down from the top to the 25% and potentially even lower from here, right? We could go into that. How far are we going to go? We've talked about that earlier this year. We have a whole session on how far do we expect this bear market to go, right? Next Monday, we're going to do a market update. We'll dive into the S&P 500 chart and take a look at some of those things, seeing exactly where we're at and where do we expect to close out the year in the indexes. So we'll take a look and have that discussion. But investing may be active, but it's still more passive than trading. It's longer term. We're going to buy it and we're going to hold on to it. The time frame is very different. Investors, right? Investors, even if they are more active, tend to look to buy and hold a position, right? For years, even potentially decades. Okay, that's a lot different than what we're talking about when we talk about trading. We sometimes have students come into the classes. They know they're coming to a trading class, but the paradigm, the lens they have is that, well, we're going to buy companies and hold on to them until they go up. And at some point, if they go up, we're going to sell them. That's pretty much as specific as it gets for some people. And that's really more of an investing mindset, right? The time frame there is we're not sure exactly what it's going to be, but we're just going to buy it. We're just going to hold it. And at some point, I'm going to need it. So I'm going to sell it, right? Investing is more of a long-term buy and hold. Trading doesn't work that way at all. Trading is much shorter for us here at Tradeway. We might be looking at anywhere from 2 days. Now that's a whole lot different than potentially, 2 years, 2 decades. Okay. 2 days to 2 or 3 weeks, in some cases, a month and a half, depending on the kind of strategy we're looking at. By the way, we looked at some option strategies in our options preview earlier this year. If you didn't see that, you can go back and watch the options preview. You may not even know what an option is, but it's pretty cool to know that I can go out and not only buy stock and hold on to it, right? But I could actually go out, own stock, and essentially rent it out to the market. I can make some cash flow on the asset of the stock that I own. That, for example, just one example, is what we call a covered call. That's an option strategy, right? There's so many interesting things we can do in the market as traders. It's a different skill set. And I may do a strategy like that for 30 days, right? I could do it for less. I could do it for a little bit more even, but it is a shorter time frame, okay? Traders are looking to benefit much, much shorter in time frame. The reason we're getting in and out is that we're taking advantage of that stock in a different way. And I'm going to talk about that in a minute. But traders are looking to make profits more consistently in a shorter time frame. We're not looking for that long upward growth, which is good. We don't mind that. But we're looking to take advantage of some of the back and forth of that price, even if it's continuing to advance, right? Monthly cash flow, right? The idea, what I mean when I say monthly cash flow, is similar to what I just said, right? What if I could take a stock that I own and actually, in essence, rent it out to the market so that I am able to just make some cash flow every month? Almost like if I owned a property and I put a renter in it, I still own the property, right? I still own the property, but now I'm making money off of that asset. I'm paying down the asset because of the renter, and I'm even making a profit on that, depending obviously on what the rental rate would be, but you're able to do that. Well, in this, I can go out and in an instant, I can buy stock in the market and I can go ahead and sell covered calls, rent out the stock, if you will, to the market. That's a good analogy to help us start to understand how it works. Now, there's a strategy there. There are risks there. There are things we need to learn to do and manage. But we're exposing you that the side of this that is trading has an expectation that things will move faster. So the time frame is definitely different. And this is one of the reasons that if I use the skill set of investing for a trade, they don't mix. The second thing is that if you apply the one to the other, like I just said, right, they don't mix, because I'm going to use primarily technical analysis, price analysis. Now, when I say price analysis, I don't mean like it used to be, looking in the Wall Street Journal or whatever your paper was that you would read. You could go back to the backside of that newspaper and there'd be all these quotes listed everywhere, or maybe the ticker tape, right, on CNBC, on the TV, or wherever you get your news. That's not what I mean at all. I don't necessarily mean the price in numbers. I mean the price chart that we've showed many times here on Market Monday, and we do all the time here at Tradeway. We have software and it plots the movement of that price. It's important for us to understand that for traders, price is moved by human behavior. It's humans buying and selling. Now we understand that there are even, a high-speed computers, trading, things like that. But even that is programmed by people. So prices move in patterns. They move in patterns because of the buying and selling that people do, right? They can repeat the same visual price pattern over and over and over again. This is what gives us an entry into being able to be a trader. We're using technical analysis primarily as an investor, right? Somebody like Warren Buffett, right? Who has an incredible investing mindset, right? Which both investors and traders can learn a lot from some of the things he has to say. But Warren Buffett, primarily speaking, is not a trader. He's not a trader. He is an investor, very long term, right? He certainly is more of an active investor, but he's an investor nonetheless. He's looking for a company or companies that are good, solid, healthy, growing, prosperous companies. And he's going to take some of his big money, park it in that company, and he's going to keep it there for a long time, right? He's not looking for a strategy to take advantage of short-term, human driven, if you will, price swings like I just described in those patterns. No, he's not interested in doing that. He's taking his big money and he's parking it for the long haul, right? That's what he is doing. That's very different. He's not going to use technical analysis primarily. He's going to use what we call fundamental analysis. Traders look to use technical analysis, but investors look to use fundamental analysis. The way I always describe this is if somebody is dating somebody, if you follow this, right? You might go on a date. Maybe you did, your spouse, when you met them. You went on a date with this person. You don't know very much about them. That's kind of the point, right? You're getting to know this person, but you're not making a big commitment. You could think of a business deal even, right? I'm making a business deal. Well, if I'm going to do a business deal versus a business lunch, those are two very different things. Once we're starting to talk about a long-term commitment in any kind, I want to know more about what's really going on inside this person, right? Well, stocks work the same way for long-term investors. If I'm going to invest in this company, I want to know how healthy is this company? And there are many ways to take a look at how healthy a company is. This is what we call fundamental analysis. It's like I tell people going to the doctor and going, "Hey doctor, am I healthy?" He can look at you. Maybe there's some things on the outside that show, actually, you look pretty unhealthy, but you might look healthy too. He's going to go, "I don't know. Let's do some tests." And there's lots of different tests that a doctor could do. Well, fundamental analysts have lots of different tests they can do on companies as well. We talk about, for example, the PE ratio, the price to earnings ratio, which is a mouthful for those of us who aren't familiar with it. And it makes it seem like it's much more about math, right? And on the investing side of things can be a little bit more numeric. They can be more mathematical, right? Trading as a whole isn't driven by that quite so much because we are using the price, right? It's a little bit counterintuitive, but the long term, it requires some of those fundamental tests, right? To tell us, how healthy is this company? So there's different things, the PE ratio I mentioned, there's earnings reports, there's balance sheets, there's what's the leading, who's in leadership, how much of the stock do they hold? Are they buying more? Are they selling more? I mean, there are so many different things that we can look at. Now, certainly there are some that are more popular than others. But when you look at these as a trader, in many cases, it's kind of just, I hate to say wasting your time. I don't know if I'm going to go quite that far, but it can. Because if you're only going to hold a stock for a very short amount of time based on the price, it's just not as important that you know the factors that are going to impact that stock over the next 6 to 12 or 18 months or even more, right? That kind of stuff doesn't really matter, right? This is like in the economy right now. I'm reading articles about different headwinds that we're seeing in the economy. Is this economy going to really tank into a nasty long term? For the trader, I'm more interested in what the market's doing today. What's it doing today versus what's the probability of what's going to happen in 8 months, right? And I see new students cross these wires a lot, right? I don't go out and trade a company because it's a household name and I like the company and I like their product, and oh, Apple's going to launch a new iPhone in 6 months, and no, that stuff doesn't matter to me right now, right? What's happening right now as a trader? As an investor, yeah, those things can come into play for sure. All right. So it's a little bit different. So the time frame, but then also when am I going to buy and why am I going to buy, right? Time frame, when, but also approach, why? Why would I buy? Very different from an investor to a trader. Okay. Let's just go through a little bit of the comments here. Wally, what's up? Thanks for your time, mate. Hey, that's awesome. Good to see you on here, Wally, from the Colorado mountains. All right. I'll be going out to Denver this weekend. That's great. Benny, Texas. All right. Awesome. Paulette from Chicago. There you go. I was just in Chicago just this past weekend. Love that. Blair, here's a question. Blair, does the average investor fare better than the average trader, right? Trading has a bad rap out there when I bring it up to certain people. Sure. They feel it's too risky, even foolish to consider. It's a great question. I'm going to put it up on the screen so everybody else can see this and we can talk about this a little bit. I could adjust this down a little bit here. Here is the thing about, man, there is so much to say about this. I love this question. All right, let me start here, okay? Trading has a bad rap out there when I bring it up to certain people. They feel it's too risky. They feel like it's foolish to even consider doing. Okay. From what I've seen and what I've learned doing this and meeting literally thousands of people, right? I mean, we're talking 200-300 people a weekend typically. So we're talking thousands of people. Now, obviously, I don't have a personal relationship with every single one of them, but I've met a lot of people. So that's where I'm speaking from when I say this, okay? Also, having watched traders, traded myself, learned the skill set, been exposed to a lot of other traders, that's also where I'm going to be speaking from on this. And this is really important, okay? A lot of people have no problem paying a financial advisor substantial fees over their lifetime. If you look at a table, right, at a return table on how much different the returns on your investment are because of compounding costs, even just 2% a year management fee, compounding costs from what you would have made to what you actually made because of those compounding. We talk about compounding returns typically, but we're well, I may have frozen there for a second, guys. You can let me know in the chat if I did. It just reloaded on me there. So just let me know if you missed something. But we typically talk about the compounding interest, but the compounding fees are a huge deal. We're down 25% in the market right now, right? I meet people every weekend who've lost significant amounts of money. And it's not just that they've lost significant amounts of money. When I go and they come to me and they say, Blair, what do I do? I say, are you paying somebody? Are you paying somebody right now to manage this? And if they, and usually they do, say, yes, I am, right? Yes, I am. I say, what's their plan for you? And I almost never, I'm not going to say I've never, but pretty close, have never had anybody say to me, yes, they have a really good plan in place. And they picked up the phone and they called me and they let me know. No, I don't even get a phone call. I get a prospectus every quarter. And every quarter, if we're in a bear market, it's down further than it was the last time. And that's it. And I'm going to call them and they're going to tell me, well, you got to hold on. We're just going to hold it. We're going to ride it all the way to the bottom. We're going to lose a whole bunch of money and it'll take 4, 5, 6, 7, 13, whatever years for it to come back. So when I hear feedback that trading or learning to manage your money, you can be conservative, you can be more risky, but you learn a skill set that gives you the ability to choose, means that you're not leaving it in the hands of somebody else that, in my opinion, is doing one of the riskiest things we could ever do, which is give our long-term retirement, literally our future, into the hands of somebody else who we're supposed to trust. We assume that they're doing what they say they're supposed to be doing. And I'm not trying to demonize advisors here at all. I'm telling you what I hear from person after person after person after person after person after person. And I'm hammering this home because this is a part of the education. This is a part of why this is so important. There is a system set up that does not equip you for making decisions. And it's been done so effectively well that when you say, hey, I think I'm going to learn to start managing some of my own money, people go, wow, that's the craziest, riskiest thing you could do. And from my perspective, I go, no, not learning and continuing to do this the way that they've told us we need to do it is a much, much riskier way to go. People are going to lose their shirt in the recession, just like they did in 2008, just like they did in 2000. And people can be equipped to know, at least basically, what to do to protect their money, right? But they aren't learning that because there's so much cynicism and skepticism around the market. That's the first thing I'm going to say. The second thing I'm going to say is they think it's gambling. They have a cousin or an uncle, forgive me, cousins and uncles, who went out and opened a brokerage account and blew it up, right? Didn't understand the disciplines of trading, never got trained, just went, opened an account, gave it a shot, went up against the best traders in the world with no skill set, no emotional control, right? Or very little. And it didn't work. People tell me at the events all the time, Blair, I think I'm going to go. I'm just going to kind of dip my toe in the water. I'm going to try this out a little bit and see how it goes. And I can't help but challenge them and say, you know what? I get that. I totally get that. This is very new to you. But if you go and try to trade without any training, only to come to the conclusion that whatever results you get tell you whether or not you should do it, that's very self-defeating, because if you're not trained, you won't get good results. And then you get bad results and say, well, I guess I shouldn't do this. And there is potentially an amazing opportunity for you and your family right out the window, right? So it's really self-defeating. And again, if people think that it's gambling, well, then you have no edge. It's just random. You have no idea, right? People don't even know that a stop loss exists. What's a stop loss? It's an automatic order that stops the loss. I tell people that a stop loss exists and they're like, oh my goodness, that's crazy. I tell people this, and I know I'm going on the soapbox now here, right? We've opened it up. This is important. I say, you have health insurance? Yes. You have car insurance? Yes. Home insurance? Yes. Renter's insurance? Yes. Did you insure your iPhone? Yes. Right? We have insurance for all kinds of things. All right. What about your retirement insurance? What about your 401k insurance? What about that? Oh, your financial advisor says you can't time the market. Okay. Let's just say that's true. You can't time the market. It's impossible. Okay. Well, then let's buy some insurance. Insurance? I didn't know there was insurance. What do you mean? There's no insurance for that. How do you buy insurance for that? Well, it's called a put option. It's extremely easy to buy, right? We pay a little bit of money and we insure the portfolio. Well, no, they never told me about that. Okay, so there's a very basic thing. You have an equity position. You have a stock position. The risk of it going down is already there. Your advisor or whoever, right? And by the way, some people don't have this conversation because they don't have anything in retirement. They don't have anything in the market. They don't have any skill set. Well, how's that less risky, right? And listen, I'll back up and I'll kind of take it down a notch for a second and say, I understand. I told you at the beginning, I knew nothing. When I don't know, it's very easy to believe the narrative that I'm handed, right? Especially if I've heard that some people lost money in the stock market, especially if I believe that it's gambling, right? That's a big deal. That's a really big deal because it holds me back. As a Christian, I'll tell you what, I'll take it this direction. Guys, I walk around every day, and I meet people and they are 100% absolutely convinced that what you see is all there is. That's it. It's not a question. It's not a debate. It's scientific fact. End of discussion. That's all there is. They believe that 100%, right? Two completely different perspectives on something. Even though the testimonies, the experiences, the miracles in front of my eyes in my life, I tell the Trade Surge crowds when I'm preaching on Sunday morning, it's too late for me. You can't talk me out of it. I'm too far gone in Jesus. But if you don't know, if you just don't know, you've never seen it, you've never encountered it, you've never learned anything about it, right? It's just easy to accept the common narrative. It just is. Now, let me say this last thing. Can I go open an account and engage in really risky behavior and lose my money? Yes, sure, you can. You don't have to. You can be financially empowered and you don't have to do that. You can be as conservative as you want, right? You can be as aggressive as you want with a little bit of money. We help people discover where they should be, right? So, the broader conversation is a really important one because for all the people out there, we have coaches here at Tradeway. They came to our program long before I ever came. They came to our program because they had an advisor who lost their shirt in 2000. And then only a few short years later, lost it again in 2008. No plan, no protection, no insurance, no phone call, nothing. Is that less risky? Right? You don't have to be a day trader. Tradeway doesn't teach day trading, right? Which is typically, accepted as the riskiest form of trading, right? That's totally different. No, we're trying to say not being educated, that's the riskiest position to be in of all. Because either you're going to bypass the opportunity of the market entirely, or you're just believing the same old. You got your job, you got your 401k. Hey, Blair, how old are you and how aggressive do you want to be? Okay, all right, let's sign it, set it, and forget it. We'll send you a prospectus in 3 months and you can look at it, have no idea what it is, never look at it again. And in 10 years, hopefully you don't lose 30, 40, 50% of your money in a recession. You see what I'm saying here, guys? Right? It's just not smart. It's not smart. But, it's easy to fall into. It's easy to fall into, right? Some of you guys will be really active traders. Some of you guys will choose more conservative, less active ways of doing it, right? But everybody can learn something and get an upgrade in what you're doing with your money, right? Wally, can wise trading be a good source of cash flow? Hard to invest meaningfully without cash. Cash is seed, right? Money is seed. You probably need less than you think you need, especially to practice and grow your skill set. I've been talking about the seasons of the weather and seasons of the market, right? We got 4 and 4. Okay. That's really how it works. Well, we're in fall and you look at the market, and I never intended this to be a pun, but the market's falling, right? We're in a bear market. but we're not really in what I call winter. We haven't really in our economy or in the market gone into a full-fledged winter. Okay. Will that happen? Well, this past week, Elon Musk, he's saying we should expect it, right? Jeff Bezos, he also last week said the same thing. He quote said, time to batten down the hatches, right? We've got the CEOs of big major investment banks saying, pretty good chance we're going to see a full-on recession next year. What am I saying? Well, that's winter. But even if I've only got a little bit of money, learning what to do with it is important now. Doing the right thing now is important because it's going to be spring. More millionaires are made in recessions than any other time because prices reset. While the world is getting crushed over expansion, right? Again, I think I froze. It doesn't tell me when I freeze. It sometimes just reloads the page, so I apologize. But while the world is getting crushed under the weight of that contraction, other people are preparing for the re-expansion because markets move in seasons, right? So taking a little bit of money, if that's all you've got, and saying, all right, I'm going to put some money aside and I'm going to learn and I'm going to plant some seed. Okay. You say, well, I don't have a $10,000 account. Okay. That's okay. We can be moving forward. Now, when you say, is it a good source of cash flow? If I'm looking to take in $1,800 a month, right, out of my trading account, and my trading account is $1,000, that's not realistic. But realistic can be, hey, I'm going to learn to grow and I'm going to build that account. I'm going to take the opportunities that I have, right? Because when you look, again, I talked about compounding costs, but compounding gains is a very powerful concept. You can grow a little into quite a bit, right? But you have to be consistent. You have to be active. Wally, I see your comment. Freeze again at Crush. So I think I picked it up. I picked it up right from that spot. Right. So you see, you understand what I'm saying when I start at the beginning and I say, hey, I love the questions because I'd rather speak to what you're feeling and thinking right now in the markets than any other topic I can just talk about. Now, investing versus trading is important. Here's the thing. You can trade in any market environment. Right now, investing, buying stock, right? This isn't a great time for that. The reason the markets are going down is because people are selling. Now, this is the last thing I'll say on this because this is interesting to me. I think of Wall Street versus Main Street, right? This is kind of the discussion we're having tonight. Wall Street, Main Street. It's interesting that we will pay somebody, you and I, on Main Street to manage our 401k, our IRA, or a bank, wherever we're doing it. Okay. No, Blair, you can't go to cash. You can't time the market. You shouldn't get out. Well, why shouldn't I get out? Well, because it might go up. You might miss that. Oh, you're gonna get out, and then it's gonna. No. We just gotta hold on, man. Just gotta hold on, because that's the less risk. That's wise. You gotta just long-term game, man. You just hold on. Okay. It doesn't matter if you're maybe 58, 52, right? It's one thing to lose 40% when you're in your 20s or 30s. It still stinks, in my opinion. It's totally unnecessary. But you have more time to recover. But on Main Street, no. You just gotta hold on. Well, guess who doesn't hold on? Guess who doesn't just hold on? Wall Street. Blair, can you prove that? Yes, I can prove that. If we pull up a chart of the S&P 500, it's down 25% from the highs. You know why? Because Wall Street is selling stocks. They're getting out. They don't want to be in because the risks are too high. They're taking profits. They're getting out. Meanwhile, Main Street is supposed to ride it all the way to the bottom. And I can prove to you by looking at a chart that that's not what Wall Street is doing because the chart is moving down. So why should we have to do that? And it's so prevalent that we buy into this that if Wally comes to me and says, "Hey man, I'm thinking about learning to trade," I'm going to say to him, "Are you nuts? You can't learn that. You're just going to get crushed." I tell people all the time, you know how we train? You start and you don't even trade real money. It's paper money. It's virtual. You don't even trade money until you start to get comfortable with virtual money, right? We've got to push against that thing that says, no. I tell people all the time, possibility is the boundary line of expectation. Possibility is the boundary line of expectation. You will not expect anything outside of what is possible, even if it actually is. Wally, with winter coming, is it worth paying more attention to learning wise trading or wise investing? Can successful trading happen in the winter to produce seed? Yes, first of all, yes, successful trading can happen in the winter. It's a unique skill set for sure, right? That's why we teach options here because it gives us flexibility. And we need flexibility in market environments like where we're at right now because it's very volatile, but it is possible. With winter coming, is it worth paying more attention to learning wise trading or wise investing? Really, we're going to help you do both. We're going to help you do both, right? Prepping for better times, having some capital on hand, right? I think that's a good plan. That's definitely a good plan. All right. We're pushing just about 45 minutes. Hey, listen, I appreciate you guys being on with me tonight. This was a good conversation. I saw a couple of tags there. If you know somebody who needs to hear this, right? Hey, listen, I need to hear this. I needed to hear this when I first started and multiple times along the way. You know, at Tradeway, I didn't just learn to trade, I learned how economies work, right? Am I a Nobel Prize winning economist? No, I'm not. But I understand how things rise and fall. I understand how to insure. I understand how to see when seasons are changing. I understand how to utilize options for different market situations. I understand how to play this game. I understand what a trader needs to do to control themselves, which, by the way, is really the reason people succeed or set themselves back. It's what's going on inside me. And that's what we try to help people do here at Tradeway, successfully navigate that so you can grow your money, right? But I needed to learn that too. So if there's somebody out there that you know needs to hear this, go ahead, tag them, send it on over to them. If you haven't subscribed on YouTube, click that button right now, subscribe, join us. We've got great programming every day right here on Tradeway TV. You can like us on Facebook. It will notify you when we're going live. Wally, let's see, Eva, Taw, I hope I'm saying that correctly. I got some more folks up here. Benny was with us, Paulette, everybody who joined, everybody who commented. Appreciate you guys being on here. Of course, I will be back next week as well. Same time, right? As they say, same bat channel, if you guys remember that. And I appreciate you as always, and we'll see you soon. Good night.